Roxham TV and welcome to the bear market because today absolutely every single market is breaking. BTC started to dump first yesterday. It dropped to $80,000. It depends on which exchange you go to. And then everything else went downhill. So within an hour, gold dropped 8% and it raised $3.1 trillion in the market. Silver did similar stuff. So silver dropped 12%. It raised $700 billion. S&P 500 dumped 1% and it raised $800 billion. And crypto market cap, it raised another $110 billion. In a span of 1 hour alone, over $5 trillion was wiped out from these assets. This is equivalent to the GDP of Russia and Canada combined together. So question everyone is asking the market, what triggered this? So actually for gold and silver, leverage was the biggest trigger. Retail FOMO at the top. We talk about this on Roxham TV and how locally here in Hong Kong, people are queuing outside a store just to try to purchase a bar of silver and end up they have to queue for like 2 months or 3 months just to get that silver bar. And what retail is experiencing in silver market is that they got wiped out within an hour. Same for crypto and stocks. So US and around escalation was one of the reasons why we experienced such a massive market crash going on right now. So what we know so far is that the US aircraft carrier has gone dark, which signals possible preparation for action against Iran. So today they are packed with news, and we're going to start with the reason number one, like why we are seeing this huge dump. Of course, we're going to get into the Bitcoin TA because, like, magically speaking, price, the charts always warn that there's going to be a correction, and now looks like the narratives on the news finally catching up. So first of all, let's start with Donald Trump and Iran. So the Middle East is back on edge right now. Donald Trump is wanting Iran to agree to a new nuclear deal or face what he calls far worse military action, and the US warships moving into position. This is no longer just talk. So let's break it down what happened. So Donald Trump is escalating pressure on Iran. In recent public remarks and social media posts, he warned Tehran that if it refuses a nuclear agreement, military action could follow. He pointed to last year's joint US-Israel strikes on Iranian nuclear sites as a preview of what could happen again. So the message from Donald Trump or from the US is really clear. So negotiate now or face consequences later. Of course, Iran is not backing down. Iran is not staying silent. Iranian leaders quickly responded by warning they would retaliate against the US, Israel, and other allies if attacked. That raises the stakes significantly because retaliation in this region can spread fast. At the same time, U.S. forces are increasing their presence nearby, like Middle East. An aircraft carrier strike group has been deployed to the region. That's often seen as a signal of readiness, not necessarily action, but preparation. Administration officials say Donald Trump has not made a final decision yet, but discussions are happening behind closed doors. And according to multiple sources, advisors are weighing targeted strikes. These could focus on Iranian security forces or leadership figures. The goal would be to weaken the government and possibly encourage internal protests. But experts warn these moves could carry serious risk. So US intelligence assessments suggest Iran's leadership has been shaken by recent protests and economic pressure. Here we have more videos, more footage about Iran. Like, of course, the Iranian government blocked the internet, so there's only limited footage leaked out. But like the officials figure put by the Iranian government that they only killed 6,000 or less than 7,000 people, but the actual number looks like it would be more than 30,000 people being killed in protest. But okay, there are no signs of major cracks at the top in the Iranian government just yet. In other words, the government remains firmly in control for now. That makes regime change through airstrikes unlikely. Diplomats in the region are very worried, so some Gulf allies fear they could be early targets if Iran retaliates. There are concerns that many military action could trigger wider instability across the Middle East, and once escalation begins, it's hard to control. So Donald Trump, like despite the tough language, Trump says diplomacy is actually still possible. He says he wants an agreement that permanently blocks Iran from developing nuclear weapons. Iran, however, insists its nuclear program is peaceful, and Tehran says it will not negotiate under pressure. Russia is also stepping into the story, very diplomatically speaking. So, Kremlin officials are urging both sides to avoid military action. They warn that escalation could destabilize energy markets and spread conflict across the region. With global oil flows at risk, markets are paying attention. And of course, Russia is paying attention, being one of the biggest oil exports among the whole world. Right now, the standoff is entering a sensitive phase. So warships are in place and both sides are drawing lines. History shows that miscalculations in moments like this can escalate very quickly. So final key takeaway for news like this. So Donald Trump is increasing pressure on Iran while keeping military options open. Iran is warning of retaliation. Regional allies are really nervous, like in the Middle East. Global powers are calling for restraint. Diplomacy is still possible, but tensions are definitely rising. And when military assets are already in position, even small missteps can turn into major conflict. For markets, energy flows, and global stability, this is a story investors definitely cannot ignore. All right, so we'll continue to track this closely, but here comes more Donald Trump news. So because global politics just got more complicated, President Trump is warning the United Kingdom, so the UK, that doing business with China could be very dangerous. And it comes right as Britain is trying to reset relations with Beijing. So let's break it down. Donald Trump reportedly warned that it would be very dangerous for the UK to do business with China. He made the comment while responding to questions about British Prime Minister Keir Starmer's visit to Beijing. Donald Trump's message was clear, once again, so close ties with China could carry risk politically, economically, and strategically. This warning comes at a very sensitive time. So the UK and China are taking steps to repair relations after years of tension. Prime Minister Starmer is currently on a four-day visit to China. This is the first trip by a British Prime Minister in 8 years. The goal is to rebuild economic cooperation and stabilize diplomatic ties. China is also making concessions. So Beijing different deals. The first one, so Beijing agreed to cut import tariffs on British whiskey in half. The rate drops from 10% to 5%. So we know that whiskey is very important, but this is not the only agreement that Beijing made. So the second agreement is that China also confirmed visa-free travel for British citizens for up to 30 days. These moves are designed to boost trade and business connections. And not only this, there is major business deals flowing into China. So British British giants AstraZeneca announced plans to invest $15 billion in China through 2030. That investment will go toward research, development, and manufacturing. And Starmer traveled with a delegation of nearly 60 business leaders. This signals that the UK is serious about expanding economic ties. Donald Trump, of course, is not happy about this. He warned about UK. He warned the UK, and also he warned Canada. So about deepening business with China. So he said it would be more dangerous for Canada to move closer to Beijing. He has previously threatened major tariffs if airlines expand trade deals with China. The message from his side is clear. So Washington wants its airlines align on the China strategy. But what Donald Trump has been doing for the past few months, he's basically pushing all his allies towards China. US and China, he says the UK can maintain strong relations with economic engagement with China does not mean distancing from the United States. While experts says Britain is walking a tightrope, the UK wants more trade opportunities while avoiding tension with Washington. This strategy is being called rebalancing, not a full reset with China. Other middle power nations are taking very similar approaches. Several Western leaders have recently visited Beijing. Countries are exploring ways to reduce economic dependence on the United States, but they are also trying not to provoke Washington, or more specifically provoke Donald Trump, because he's being so unpredictable. So this reflects ongoing uncertainty in global allies. So clean takeaway for this, Donald Trump is warning airlines about deepening ties with China. At the same time, the UK is pushing for economic cooperation with Beijing. Both sides are trying to protect their interests without triggering conflict. This diplomacy in a world of competing powers. So for markets, global trade, political stability, the balancing act between the US and China is becoming harder, definitely not easier. And as more countries seek flexibility, pressure on traditional allies will only grow. So we'll continue to watch how this story develops. Moving on to the next major news we have to cover. So the next Federal Reserve chair could change the direction of the entire US economy. And Donald Trump is announcing he will replace Jerome Powell in the coming hours, basically. So on Friday morning. So let's break it down. So Donald Trump announced he will review his pick for the next Fed chair. He made the comment during his first cabinet meeting of the year. So the new chair will replace Jerome Powell, whose term would end in May this year, so May 2026. Donald Trump repeated his belief that interest rate should be much lower than what the current rate it is right now. So this is not just a routine appointment. The Fed controls interest rates, so an interest rate would affect absolutely every single thing. It would affect stocks, housing, your mortgage rate, crypto, borrowing costs, and economic growth so far. So who leads the Fed will shape monetary policy for years. Right now, if we look at the current rate of the Federal Reserve, so it's at 3.5% to 3.75%. So Donald Trump said this rate, the current rate, is still too high. So he wants the rate to be like 2 to 3 points lower. Even though the economy is still growing, he believes lower rates would boost momentum. And this puts the White House and the Fed on very different pages. There has been months of public tension. So Donald Trump has openly criticized the Fed's decision. He also supported legal and criminal probes involving Jerome Powell. Critics say this adds political pressure on what is supposed to be so-called independent institution. And for now, the markets are speculating who will replace Jerome Powell in the coming hours, who will Donald Trump announce. So there's a huge jump on Polymarket. So sitting on number 1 with 94% chance of becoming the next Fed chair, according to Polymarket. Okay, the first one is Kevin Walsh. The second one right now is Rick Ryder. And there's like an interesting dynamic because just a day ago, if we look at the poll, so Rick Ryder was actually sitting at number 1 with 33% of people think he's going to be the next Fed chair. But like overnight, there's a huge jump. So since Donald Trump will be announcing on Friday morning, which means in coming hours, like very likely then Kevin Walsh going to be the next Fed chair according to Polymarket, because usually Polymarket is quite spot on with these kind of stuff. And for those of you who wonder like who is this Kevin Walsh person, he is basically the former Fed governor. So yeah, we're going to get the answer in the coming hours. And speaking of the interest rate, like the probabilities of the interest rate, people are speculating that whoever replaced Jerome Powell will cut rate before Donald Trump even say a word. So just 2 days ago, we're looking at the probabilities on Fed Watch. So before this person came along, like almost final. So Kevin Walsh. So before the rate of Kevin Walsh is so high, when we were looking at this table 2 days ago, people are only speculating we're going to get 2 rate cuts throughout the entire 2026. So here, one and then second one, but like some interesting dynamic just happened. So people right now speculating we're going to get 3 rate cuts after the probability of Kevin Walsh being Fed chair that rise significantly. So let's see if the Federal Reserve still going to be independent, because right now the independence is quite critical for market confidence. Investors want decisions based on data, not politics. So if market sense political influence is growing, volatility could increase. That is why this appointment matters beyond just Washington. The announcement, again, will be out in coming hours. Once named, the nominee will face scrutiny from lawmakers, investors, and economists. So the focus is simple. Will this new chair support aggressive rate cuts, or will they prioritize inflation control? Because right now, inflation is still sitting at 2.7%, very elevated from the target of 2%. So clean takeaway for this, Donald Trump is preparing to give out the name. The decision comes at a time where inflation, growth, and political influence are tightly connected. So whoever takes the role will guide US monetary policy through a very critical period. For markets, for investors, and for the broader economy, this may be one of the most important appointments of the year. So we'll keep watching this very closely in Roxham TV. We will take a short break for now, and coming back to you, we're also going to dive deeper into the world of AI, because something is going on. Maybe it's going seriously wrong in South Korea, so do stay with us.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin. No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back, everyone, and thanks for sticking with us. We're now diving into the world of AI and more specifically here in Asia. So South Korea just rolled out one of the world's first freely enforced national AI laws. But instead of praise, it's already facing criticism from both industry and activists. So some say the rules go too far, others say they don't go far enough. So let's break it down. South Korea has officially launched a national framework to regulate artificial intelligence. So the goal is quite simple: they want to compete with the US and China as a top AI power. But just weeks after the law took effect, resistance is already building up. So under the new rules, companies must clearly label AI-generated content. They also need to add digital watermarks to synthetic media, and firms must run risk assessment for high-impact AI systems. This includes systems used in hiring, healthcare, and finance. More powerful AI models will also require safety reports. But here's the twist. The threshold for those reports is so high that no current AI system qualifies. Many small companies say they are not ready for these rules. They worry compliance costs will slow innovation. Some argue the regulations could hurt startups and are already competing globally. Even though fines are relatively small, uncertainty around enforcement is creating pressure. At the same time, right groups say the law does not go far enough. They argue it focuses too much on companies and not enough on protecting individuals. One major concern is human oversight exemptions. Critics say these loopholes could reduce accountability when harm happens. This debate is especially sensitive in South Korea. Studies show the country accounts for more than half of global deepfake victims. That raise serious concerns about misuse of AI technology. Activists say stronger protections are urgently needed. Officials say the framework is designed to evolve over time. They want to create legal certainty without killing innovation. South Korea is not copying the EU strict rules and is not following China's state-driven model either. Instead, the country is choosing what it calls a trust-based approach. So the big question people are asking right now is, can South Korea balance innovation with protection? And can it keep investors confident while addressing public concerns? So this is a real test ahead, and we'll be following this story closely. Moving on to the next lawsuit, and it's deeply affecting you and me. So I'm sure a lot of the viewers actually use WhatsApp. So right now, your private message on WhatsApp may not be as private as you think. And this story is raising serious questions about trust, tech, and data security. The US government has quietly looked into claims that Meta employees and contractors may have been able to access WhatsApp messages, and that directly challenges Meta's long-standing promise that WhatsApp is freely encrypted and private. So let's break this down. Former contractors told federal investigators that some Meta staff had what they call unfettered access to user chats. In simple terms, they are saying certain employees could see your message on WhatsApp that was supposed to be protected by encryption. These claims were serious enough that agents from Commerce Department began looking into the situation. The investigation was reportedly active as recently as this month, but right now, we don't know its final status yet. According to interviews reviewed by Bloomberg, content moderators working through Accenture claim some Meta teams could retrieve user messages. One contractor told investigator that internal teams could, quote, pull whatever they wanted from WhatsApp systems. Others say they personally review message content during moderation work. So that's important because WhatsApp has always marketed itself as end-to-end encrypted, meaning only the sender and receiver could be able to see that message. Of course, the Meta is pushing back. So here we have one of the tweets. So the company said it is technically impossible for employees to read encrypted messages. A spokesperson called the allegation as false. They say WhatsApp's security design prevents internal access. Meta admits that it can see limited message data when users report abuse, but the company insists broader access simply does not exist. So after the report came out, Meta shares slipped about like 1%. So here we have the Meta shares after hours, so down 1.14%. Not a huge drop, but it shows investors are definitely paying attention. Privacy concerns can quickly turn into legal and regulatory risk, and that's what markets are watching. The claims have also appeared in a whistleblower complaint to SEC. There is also a federal lawsuit accusing Meta of misleading users about privacy protections. This matters even more because matter is already under long-term oversight from US regulators after past data scandals. So any new privacy concerns could bring more scrutiny. WhatsApp is being used by billions of people worldwide. Its core promise is privacy. If that promise is questioned, it affects more than just one company. It affects how people viewed encrypted messaging as a whole. Right now, investigators have not announced any findings or charges, so we don't have final answers yet. But the fact that the investigation happened at all, it raises important questions. Until there's clear confirmation either way, one thing is certain: trust in tech companies is becoming harder to maintain. And when privacy is the product, any doubt becomes a serious business risk. We will take a short break for now, and coming back to you, we're diving into the world of Bitcoin and also crypto. So Bitcoin took a really painful crash. It fell off the cliff. However, we have some good news about Japan's Meta Planet just announced another major capital raise. So do stay with us because we have more juicy news to give it to you guys.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back, everyone, and thanks for sticking with us. We're now diving into the world of Bitcoin and also crypto. So it's not all doom and gloom. I know Bitcoin and the entire crypto market fell off the cliff, but there is good news. So Japan's Meta Planet just announced a major capital raise, and every dollar is aimed at doing one thing, which is to have more Bitcoin on the balance sheet. So let's break it down in the news. So this time, they managed to raise up to 21 billion yen, and that is equivalent to 137 million USD. The purpose is clear, is to accelerate its Bitcoin buying strategy. This is now one of the largest Bitcoin-focused fundraisers by an Asian-listed company. As the planet's president confirmed and publicly, they said the funds will go directly into expanding Bitcoin holdings. So how does that capital raise work? The funding comes into two parts. First, about 12 billion yen will come from issuing new shares. Those shares are priced at 499 yen, which is about 5% premium to the previous market price. Second, another 8.8 billion yen would come from stock warrants. These can be exercised over 1 year at 547 yen, which is about a 15% premium. That tells us something important. Investors are willing to pay above market price to gain exposure to Metaplanet's Bitcoin strategy. Metaplanet's president later confirmed the transaction is already completed. Total proceeds could reach the full 21 billion yen. He described it as direct continuation of company's Bitcoin first treasury approach. In simple terms, they are converting equity into Bitcoin exposure. Since starting its Bitcoin treasury, basically the whole approach in late 2024, Metaplanet stock has seen explosive growth. So here, of course, past year performance is not doing the best because the entire Bitcoin market or crypto market is in the bear market. So here, if we're looking at the 1 year performance, is down 11%. But if we zoom out to 5 years, the past 5 years is actually up 648%. Like at some point, shares rose over 1,000%. Some reports suggest gains even reach over 3,000% during the peak Bitcoin momentum. This has positioned Metaplanet as Japan's version of a Bitcoin proxy stock. So Metaplanet is following a model where public companies use capital markets to increase Bitcoin exposure. Instead of holding fiat reserves, they are choosing Bitcoin as a strategic asset. That fact, that raise happened at a premium signals strong institution demand, especially in Japan, where markets are traditionally conservative. Asia is no longer watching from sideline; it's actually actively participating. So speaking of Bitcoin, we all know what happened yesterday. So not just Bitcoin, not just crypto, but the entire market collapsed. That includes gold, that includes silver, and of course the S&P 500. So Bitcoin crashed down to $80,000, so actually close to $81,000. So it depends on what exchange you're looking at. So what's happening? So where is Bitcoin going? Of course, we're starting with the daily candles, and then we're going to hop to weekly and also the 2-week candles of BTC. Like long story short, I hate to break it to you, it's not looking good. Like there is no strength that I'm seeing from these charts whatsoever. And one indicator that I have been using quite a lot recently, if you've been watching my show, you know, this is the cycle time frame at the bottom. So how it works is a little bit similar to RSI. So how do you read this? So whenever we get close to 80, which is the top, that signals that maybe is the top of the more recent Bitcoin price. So more from a short-term perspective. So here it aligned perfectly well. So it was back in 16th of January. So we saw a top from the cycle time frame, one cycle time frame, and so as the top in the Bitcoin's price. So we reached $97,000, and here it happened again. So 6th of January, and then we saw a top. So point being, this is a really good indicator to track the momentum or when it's time to correct. And this time, the strength, like the pump, it was so weak. So we dropped to a bottom of 13, and the pump is so weak that it's almost can't tell it's actually a pump. So that means that it's a momentum. The momentum is really drying down, and this is just one bearish signal that I spotted. This range, so that is around like 80, somewhere around like 84k to like 96k, somewhere around that, because this is more like a bear flag, so just like chops around steady on the sideways. So this bear flag, what happened yesterday is that we closed below this bear flag, which is another early sign to me that there is a low paying income, and we have officially entered that stage of bear market. So if we zoom very close, like this is the support level that we have been building up since 21st of November, and we officially broke that, and that is really concerning. This is the second BTC. Let's hop onto the weekly. So it's really building up the time frame. So on the weekly, actually let me pull up the Ichimoku cloud. So Ichimoku cloud, of course, is the leading indicator. And one very similar pattern that has been playing out is that we are trading this Ichimoku cloud. So we are consolidating, and we have been consolidating for the past few weeks or close to 3 months. And this is okay. If we look at the previous cycle, back in 2022, we spent around 3 months inside this Ichimoku cloud, consolidating, going sideways. Of course, there were some people on CT, so on crypto Twitter, saying that okay, when we pump to $97,000 or $98,000, that okay, maybe it's a super cycle, but you find out. And I have been warning about this, because if we zoom close, like what pump, like what super cycle you guys are on about? First of all, on the daily, we're just consolidating sideways inside this range. Second of all, we are still inside this Ichimoku cloud. So, like, what are you talking about? What super cycle? Just show me on the chart. If you don't manage to show me, then yeah, I'm sticking with the math that has been making me profitable throughout this ever since October 2025. Okay, so that is three bearish signals that I've go through. So, of course, this weekly candle we haven't closed yet. We are closing. Next Monday. So there's still 2 or 3 days to come. Let's see if we close below this leading span B. So this red line at the bottom. If we do close below, then yeah, this is officially the third stage of bear market. So what it means, so how low we could go. So that means, okay, this is stage number 1, and this is stage number 2. And right we're about to enter stage number 3. So how can we go journey? Like that's the question people like to ask. So I'm not seeing that some crazy number. Like I see some analysts pull out a figure 30k or something like that. So general rule of thumb is that okay, if we use the TSMA or 200 SMA for the weekly candle, right now 200 week is sitting at 85.9k, somewhere around that. So this line is slowly going to catch up and slowly rise. When we done consolidating inside this range, we eventually drop to lower. So by the time we go to low enough, it might be around like 60k or 70k. So that is a level that I'm eyeing very closely. Of course, I've got a bunch of buy orders around that levels. All right, so we have gone through a lot of bearishness, but I hate to break it to you, that's not all. Because if we hop onto 2-week candles, it's got worse. So I am like 90% confirmed that we are like officially at the stage 3 of the bear market. Like, okay, 2-week candle, we haven't closed this 2-week candle again. But like one thing that I'm watching is this 50 SMA. So again, we are on the and looking below. Like, okay, let's see what price will close. We'll be closing this 2-week next Monday as well. So those are the so this level is okay, $87,000. This is a level that I'm watching very closely. If we close below that, then we're just gonna buy more Bitcoin at around 70k. I've got a bunch of buy order at 77k. So yeah, that's for Bitcoin. And as for yesterday or maybe past 24 hours, we know what happened. So if you guys are into leverage, like I strongly advise my viewers to stay away from leverage for now, like especially during volatile markets like this. In the past 24 hours, the liquidation, okay, so $1.7 billion got liquidated, and most of that is long positions, so 1.6 billion long, and of course, most of that come from BTC, so BTC, ETH. So yes, try to stay away from leverage, and we're gonna be fine in Q4. That's the cycle bottom I'm eyeing. All right, so that's for Bitcoin updates. Let's go ahead and move on to some crypto news. So another major sell-off, like this is a incident. Okay, I've been wanting to cover since when this happened, so 28th of January. So a major sell-off hit the 1-inch token and price dropped really fast. And the first reaction from the market was simple, like what happened in 1-inch? Because it is not just a random shitcoin. Like people are wondering if the team is dumping, but the truth might be very different. So let's break it down step by step. On-chain data shows that 3 wallets labeled as a 1-inch team, they sold 36 million 1-inch tokens, and that is worth around 5 million USD. So after the sale, the token price dropped about 16% in a very short amount of time. So naturally, traders started asking one question: was this a team selling at the bottom? And here's why people get confused. Like these tokens were originally transferred into those wallets back in late 2024. At the time, the price was around 42 cents. Now the sale happened like near 14 cents. That means whoever sold likely took a loss of over $10 billion. That does not match how professional the teams have been trading. It's like it's not the usual culture of 1-inch. Historically speaking, the 1-inch investment fund has been known for very smart timing. They usually buy during market dips and they scale in slowly and they sell gradually when prices rise. They have done this before with Bitcoin, Ethereum, and of course, one inch token. In previous cycles, the strategy showed patience and discipline. So this sudden large sale showed it doesn't align with the strategy that they have been showing before. So this is where things get very important. Just because a wallet is labeled on-chain does not mean it is still controlled by the team. Like address tags can be outdated, tokens move over time, control can change. Like after the controversy, 1inch officially responded. So here's the tweet. They stated clearly the wallets involved were not controlled by the team or treasury. They also said they cannot control third-party holders. So what likely happens, okay, from the timing and execution style, analysts believe this sale come from a third-party holder, not from the core team. That selling happened in a low liquidity period. That made the price drop feel even larger than it actually was. In crypto, large transaction can create strong emotional reactions, especially when labels are misunderstood. So even with this drop, the project itself continues to operate normally. So since 2019, 1inch has processed nearly $800 billion in trading volume. Daily activity still remains strong, even during slow markets. The team says they are reviewing the token model this year to improve stability during weak cycles like the one we're experiencing right now. So clean takeaway for this news, like this sell-off created fear, of course, but the evidence kind of suggests it was not the 1inch team dumping tokens. It was likely a third-party holder. On-chain labels can be misleading. Liquidity matters more than headlines, and emotional reactions often move faster than facts. In markets like this, clarity takes time, and understanding wallet ownership is critical before drawing conclusions. So, in other words, price moves very quickly, but truth usually kind of comes very slow. And this story is a reminder of that. And yes, and that's pretty much all I want to cover in today's show. And last call to action before we wrap this up. So make sure to give us a follow on Twitter. So my Twitter is gemgencrypto_IO. Make sure to follow Roxham TV as well. And because we have regular updates, we cover the news about geopolitics, about AI, about gold. So point being, there's so much valuable content you could find here on Roxham TV Twitter. So make sure to give us a follow there. And as for my show is from Monday to Friday, starting at 3 a.m. Eastern Time. If you don't manage to catch my show live, don't worry, the replay is also available on both channels. So being Gems and Crypto YouTube channel and also Roxham TV YouTube channel. Thank you so much, guys, for watching. Happy Friday. I hope you have a fantastic weekend. I'll see you guys on Monday.